हेलो विवेक। अच्छा ठीक है, कर देता हूँ।
I think we can start the session, ma'am. Yeah, am I audible?
You are audible.
Okay, ma'am, we'll start the session then.
Yes.
Good evening, everyone. I am CA Vivek Agarwal, Vice President of Agarwal Chartered Accountant Society. I, on behalf of Agarwal Chartered Accountant Society, would like to welcome you all and our speaker, Srimati Alka Zanwar, ma'am, to this very interesting and important webinar on the topic Financial Statements of Non-Corporate Entities. I request all the participants to raise their hand in case they have any queries, or they can post the queries in the Q&A section below. Now, I would like to invite our President, CA Vijay Bhageria ji, to give an introduction of the society. Vijay ji, please unmute your mic.
विवेक,
Yes, yes.
now audible?
Yes, yes. Please
Very
proceed.
good. Good evening, dear friends. I will start with a beautiful quote for all of you. As our Prime Minister said, CA signature is more powerful than signature of a Prime Minister. This power is empowered by Agrawal Chartered Accountant Society, which is family of professional, by providing professional platform to share knowledge. Journey of ACS was started in 2010 by CA हरि अग्रवाल सर and CA मधुसूदन अग्रवाल सर. कहते हैं ना कि चलते रहे हम चलते रहे कारवा बनता गया. Journey started with few members. Now ACS has more than 300 members across the country, including several council members, central council members, central minister, and growing members every day. We are thankful to CA Hari Agrawal sir and CA Madhusudan Agrawal sir for creating such a wonderful platform where members are not only connected professionally but socially as well. ACS provide an opportunity to young CAs to understand and learn the complication of profession from senior. At the same time, senior give back to the society by sharing their experience and knowledge. They also learn new technology from young members. ACS organized various seminar, webinar, lectures, study circle meeting on various topics for its member, non-member student, or for cross professional like company secretary and legal practitioner. ACS is connected on various social media platform where member can find solution of any problem. Socially, ACS has organized many family events for its member where members share time, happiness, belongingness, which create strong family bonding between members. I now request C. Vivek Agrawal to introduce today's speaker. Thanks, Vivek.
Sure. So it
Vivek,
is my privilege to introduce CA Alka Zanwar, ma'am. Ma'am is a fellow chartered accountant. She has also completed post-qualification courses from ICAI in Information Systems Audit DISA and Forensic Accounting and Fraud Detection FAFD. She qualified as a chartered accountant in 1997 and has been practicing since then. From 1997 to 2000, she worked as a partner with Messrs. A. Ramachandra Rao and Co., an audit firm with 8 partners. Since October 2000, she has been practicing under her own firm, Messrs. Alka Zanwar and Co., formerly known as Messrs. ND Boom and Co., which was established in 1978. She is actively engaged in providing professional services, mainly in the areas of direct and indirect taxation and audit. She served as an independent director in a listed company from 2016 to 2023. Ma'am is currently a member of the Taxation Audits Quality Review Board of ICAI and the Direct Taxes Committee of Federation of Telangana Chambers of Commerce and Industry for the year 24-25. In addition to her professional practice, she has completed courses in business responsibility and sustainability reporting (BRSR) and the social audit course by NISM. Ma'am is a life member of the Rajasthani Graduates Association (RGA), the IICA Independent Director Database, and the All India Federation of Tax Practitioners (AIFTP). So, with this brief introduction, I would request CA Alka Zanwar ma'am to proceed the session.
Yeah. So first of all, I would like to thank you all to give me an opportunity to join together and learn. Basically, I would say I am not a senior speaker or a subject expert in this matter, and it is a new subject to all of us. Basically, this non-corporate entities financial statements have been brought in from 1st April 24 financial statements onwards. So this is the first time when we'll be doing the audits and presenting them in this format. So I think let us all learn together first. And then again, I would first thank Hari Agarwal sir and Madhusudan Agarwal sir to actually give me this opportunity to engage with everyone here. So bear with me. And if I'm mistaking at many points, I think we can just discuss because we are all learning here, end of the day. So with this, I would like to start the session. So the CA Institute basically has notified three standards, three financial statement protocols at one go this time. These are three were non-corporate, NPO, and LLP statements. So out of this, today we are speaking about the non-corporate entities. And in this, we would like just 1 second. I am not able to. Somehow I have logged out. Anyway, is this blocking the screen in some manner?
Yes, ma'am.
Okay. Yeah, I'm okay now. Thank you. Yeah. So, firstly, we would like to understand what we mean by non-corporate entity here. When we speak of non-corporate, it is anything other than company. Now, in that, would it include, just a second. Yeah. So, would it include a non-corporate includes LLP? No. The government clarified recently, the ICI, wherever this whole criteria has been given by the CA Institute and not by the government, basically. So wherever there is a clarification or anything, it has to be given by the CA Institute itself. So now when we speak of what is non-corporate here, non-corporate would mean individual, anyone who is doing business, anyone who is getting balance sheet prepared for the purpose of business. So any sole proprietary firm, any HUF, partnership, whether it is a registered or an unregistered partnership firm, association of person, any sort of association, it may be body of individuals or association of persons, society, trust. Now, trust here would be any trust which has even a minor financial activity, not a total NPO. Any non-profit organization would not fall under this guidance note. The or any statutory bodies, autonomous bodies formed for any business purposes would fall under the definition of non-corporate entities. So recently in an FAQ issued by the ICI, they have clarified, like for us, we would understand that non-corporate can include LLP, but they have clarified that non-corporate would not include LLP, and any company and LLP are out of the purview of non-corporate entities. So in 2022, the CA Institute came up with the idea of standardization of non-corporate entity balance sheets basically and brought out a format for presentation of financial statements of non-corporate entities. Now, what do you mean by financial statements? Again, it would include balance sheet, profit and loss account, cash flow statement wherever applicable, notes to accounts, and accounting policies. They have clearly defined what would be included in the financial statements. So why the idea of standardization of non-corporate entity balance sheets is that आज हम चाहते हैं कभी भी बैंक से लोन लेने या फिर टेंडर भरने या फिर कोई भी आपके बैलेंस शीट देखना चाहता है तो हर सीए का एक अलग खुद का फॉर्मेट रह सकता है और इसकी वजह से इज इट ओके इफ आई कंटिन्यू इन हिंदी एंड इंग्लिश और शुड आई स्टिक टू इंग्लिश ओनली?
As you're comfortable, ma'am, but I think English would be better.
Better. Okay, okay then. So then, CA Institute felt that there is no comparability in most of the balance sheets, and for investment or tenders or banking purposes, it would give more authenticity and credibility if a similar format was followed by all the entities. So to bring in uniformity and standardization, this whole new format was presented in 2022. Then it was upgraded as a guidance note on financial statements for non-corporate entities, which was to affect the balance sheets prepared from 1st April 24 onwards. So this guidance note superseded the technical guide basically. So no longer you need to follow the technical guide for the non-corporate entities. Guidance note has preceded it, superseded it, sorry. Then again in 24 August, they had a board meeting basically of the council meeting of the CA Institute where they have revised. Earlier, the classification of the non-corporate entities was based on the turnover and borrowing criteria based as level 1, level 2, level 3 and level 4, which we were actually getting familiar with. But then they decided to change the whole criteria and simplify it into two criteria. Basically, MSME and non-MSME. That is large entity and MSME. So if supposing an entity is going to be getting listed on a stock exchange, here we would say, how would a non-corporate get listed on a stock exchange? But then again, you have all your non-profit organizations, which may have some activity, financial activity or not. They can get listed on the NPO stock exchange now. And it should not be a bank or a financial institute or an insurance company. Having a turnover less than or equal to 250 crores would be a MSME. Or having borrowings less than or equal to 50 crores again would be considered as a MSME. And it should be an independent entity, not a subsidiary or a branch or related to a large enterprise basically. So all these criteria, basically two major criteria would be the turnover less than or equal to 250 crores and borrowings less than or equal to 50 crores. In these cases, they will be classified as an MSME. Now, what is the benefit of classification basically? Classification would is actually the format would be the same for all the entities. There is no exemption from the format of the financial statements given for the non-corporate entities. But when it comes to applicability of accounting standards, the CA Institute has said the large entities need to comply with all sorts of accounting standards. That is, CA Institute has come up with till now 27 standards and two other standards which were repealed. So overall, out of 29 standards, all 27 accounting standards would be applicable to large entities, whereas in non-corporate entities, which are MSME again, there are basically many exemptions given because they would be small non-corporate entities and taxing them with so much of burden of compliance would be a issue. Then they have actually given some, I would say it is more related to disclosure criteria have been exempted in many cases. Calculations wise also, one or two places they have given some exemptions, but otherwise most of them are related to disclosure exemptions. So complete exemption was given to MSMEs for cash flow statements. So no cash flow statement if you are an MSME non-corporate entity as per CA Institute. The MSME definition as per MSME the Act 2006 would be different from the MSME definition as per the CA Institute definition for the non-corporate entities. This may create some confusion, but let us stick to the MSME definition here for non-corporates. Then accounting standard 17, segmental reporting to is not applicable for non-corporates which are small, basically MSME. Earnings per share ratios, and accounting standard 24, which speaks about discontinuing operations, is also not applicable. Here I would like to ask if there is anything which I have missed out. Like, is it clear that this accounting standard is mandatory or recommendatory in nature? Is it recommendatory or mandatory? Can we make it interactive, or should we stick to only one way and then later questions?
As you're comfortable, ma'am, if anybody wants to speak, they can raise their
Yeah, I
hand.
think
We can
I think
unmute them.
answers can be given also in the
Yeah,
chat.
they can
if
raise their
required.
hand, ma'am. If anybody raises their hand, we can unmute
Yeah.
them.
So are we clear whether this guidance note is mandatory or recommendatory in nature? Do we have an option of not complying with the format?
We have an answer from
Yeah, I
in
am
the
not able
Q&A
to.
section. It is
Yeah.
mentioned as recommendatory,
Yeah.
mandatory.
Yes, I think Yogesh sir, I'm with you. It is mandatory in nature because all guidance notes issued by the institute are to be complied with. So as of now, it is not recommendatory in nature. And now for all financial statements which we are preparing for period relating or accounting year relating starting from April 1st, 24 onwards, we need to mandatorily comply with the format. Now again, as a CA, I would ask whether if any balance sheet I have signed after 1st April 24 and it relates to the periods earlier than 24, do I need to follow the format or not? Supposing I am signing a balance sheet of 23-24 in a present date. Maybe there is some delay or some late filing or some departmental query or so. Then what would be the position? We need not follow because this is for the financial statement. Yes, there also it would be recommendatory, but it is not mandatory. So wherever I am signing a balance sheet or financial statements prepared after April 1st, 24 for the period after 1/4/24, yes, Dinesh Agarwal, I agree with you. So it is to be applied. Then again, supposing I'm signing a balance sheet it is not a tax audit case or anything, but I am signing a balance sheet for the purpose of submitting to a bank. It relates to a period after 1st April 24. Do I need to follow the format or not? And I'm signing it. Yes, it is mandatory for me to follow the format wherever I'm signing, wherever there is an attest function. The guidance note speaks clearly that wherever there is a attest function coming into picture, I need to follow the format. Then again, my question would be, do I need to, do I need to generate a UDIN here when I'm submitting to the bank? Yes. So all cases where there is an attest function, UDIN is anyway mandatory. And wherever there is an attest function, the format is also mandatory if it is a financial statement after 1st April 24 for the period relating to financial statements after 24. Okay, I think we are clear with this now that it is mandatory and it has now come to be a reality actually, and it is no longer only a recommendatory nature thing.
Ma'am, we have a question also. Do you want to
Yeah.
take the questions while we discuss or towards the end of the session,
Yeah,
ma'am?
I think more technical questions I would take it up later,
Okay,
in
ma'am.
the end. Yes, compilation of financial engagements in accordance with SRS 4410 should, this is Yogesh sir's question, whether the compilation of financial engagements in accordance with SRS 4410 should also follow this new format. Yes. Any engagement where you are attesting it, we need to follow the new format. In the case of non-corporate entities, this format is applicable there. Then again, if financial statement is not in the format, can we qualify and attest the financials? Yes. This we will talk about later as to how to go about where the client is not agreeing and feels it as a burden to comply with the standard, or he is agreeing to, give half the data and not more of the data. Whether, no, the question is whether charitable trust not engaged in any business activity to be followed or not, please clarify. No, there is wherever there is a separate format given by the CA Institute or any other body which requires your financials to be in a different format, they have specified a format, then this guidance note has given an exemption to those cases, saying that you can follow that format. You need not comply with this specific format here. So the charitable institutions where it is coming under an NPO, 100% non-profit organizations have a separate format prescribed by the CA Institute and they need not follow this non-corporate entity format. Okay. So I think I can go ahead
Yes,
to the
ma'am.
next slide. Just a second. Okay, so many accounting standard disclosure exemptions are available for MSME, but few standards they have specifically to exempted only partly, like related party standard and the impairment of assets standard. Again, they have given a separate treatment saying that if your turnover does not exceed rupees 50 crores or your borrowings are not in excess of 10 crores, then you are partly exempted. Like, if it is turnover is above 50 crores or your borrowings are above 10 crores, then this standards become applicable. So all the disclosures, related party disclosure, impairment of asset and all, you have to fulfill all the disclosure criteria here. Basically, the difference between a large and an MSME would be the applicability of the accounting standards itself. Rest of the format remains the same. So when it comes to accounting standard 1, where you have to disclose the accounting policies, it is applicable to both of them. This we are anyway following. So all the balance sheets, most of the standards which we are actually following practically have not now got into a format. So we may have been following actually the valuation of inventory standard and the disclosure of accounting policies and like depreciation and everything earlier too. But just that now they have been brought into a regulated format. That is all the major change which is going to come up. So accounting standard 2, valuation of inventory to be followed even by an MSME, and each thing whichever we are following will have to be given a note about. We need to decide, disclose in our notes to accounts as to what is the method of inventory valuation we are following, whether it is FIFO or how are we valuing at cost or less than market realizable value, or how are we valuing them. So all standards which we were following earlier too need to be followed along with disclosures in the notes. Cash flow statements have been exempted for MSMEs. So contingent liability, contingencies and events occurring after balance sheet date are generally applicable, because if they are affecting the balance sheet, so then they would have to be applicable to whether it is a small entity or a large entity, we need to give effect to them. So accounting standard 4 logically has been included even for an MSME. Then if we see accounting standard 5, where we need to bifurcate all your prior period items and changes in accounting policies. So most logical items have still been applicable to MSMEs. Accounting standard 6 and 8 were removed by the CA Institute itself, so they are not applicable to any entity as of now. Accounting standard 7, where we used to value the construction contract based on your completion method, percentage of completion method, and based on that, your revenue recognition is done. All these are again applicable whether it is a small entity or a large entity. Now, the major point of discussion we have here for the non-corporate entities, or the major area of challenge we expect from the format would be the accounting standard 10. It is partly exempted for MSME, saying that idle items need not be disclosed, but uh, the whole point of reporting your and first thing, the terminology has been changed from fixed assets to property, plant, and equipment, even for non-corporate entities. So now there is no word called fixed assets for companies or non-companies. And if you see the balance sheet of a company or a non-corporate entity, now it is mostly similar balance sheet. So the PPE terminology has been brought into non-corporate entity also, and accounting standard 10, which speaks about your useful life of fixed assets, percentage of depreciation method based on the useful life of fixed asset, or the PPE has to be bought in here also. So how do we go about presenting the balance sheet where we are used to following the rates of depreciation as per income tax method is the point which we will discuss later on. How do we go about? Then accounting standard 11 has been partly exempted for non-corporate small MSME entities. Government grants, investments, amalgamation, no, investment is applicable, whereas amalgamation, consolidated financial statements, discontinuing operations, interim financial reporting, and financial for joint ventures and all, which may not be applicable to small individual accounts and all, have been exempted for non-corporate MSMEs. When we speak of employee benefits, it is partly exempted in the sense that the CA Institute has said in these cases, where it is a small entity, you can value your employee benefits like gratuity or any other provision which you need to create for employee benefits based on your own scientific calculation, and you need not go in for an actuarial method. Just a second. Actuarial calculation of your employee benefits, retirement benefits is not mandatory in the case of MSME non-corporate entities. That much of relaxation they have given. Another relaxation which they have given is in accounting standard 22, where accounting for taxes on income, at least the deferred tax part, they have exempted the non-corporate MSME. So you need to give the current taxes provision and all, but you need not give the deferred tax calculation and create deferred asset or deferred tax liability here. Leases, some of the net present value disclosure requirements have been exempted. And similarly, in the case of impairment of assets also, some part of the, if it is applicable in the cases of non-corporate entities, then some part of the disclosures which are there are exempted. Actually speaking, strictly speaking, only very few standards which we are already following in most of the cases will be binding for the non-corporate MSME here. So borrowing cost and all, we actually are following anyway. Revenue recognition, we are following. Government grant, wherever it is there, we are following. So direct implication would be in very few of the standards, I would say. Then if we actually go to the other requirements, now are we clear here whether the classification of this MSME into 250 crores, if I'm having 250 crores turnover, is it applicable in my case? Am I a large entity or a small entity? So my question here was, am I a large or a small entity if my turnover is 250 crores? Yes, small entity because it says equal to less than. So up to 250 crores, I think it is reasonable enough. I would still be a very small entity and it would take time to reach 250 crores turnover for me. Similarly, for borrowings also, they have said up to equal to or less than 50 crores. So once it is 50 crores, I think all your bank and everybody would require some format to be followed strictly. So when we see last year accounting, like the statistics of last year's income tax returns filed, there were around 7.28 crore returns. This is from the website itself. I am just saying that 7.28 crore income tax returns were filed for assessment year 24-25. Out of that, 34.09 lakh tax audit reports were filed. Now, supposing we take an equal number of balance sheets being signed for the purpose of any other purpose, borrowing or investment or tendering, or so around 5 to 10% of balance sheets actually of the income tax returns filed are to be certified and to be made into this format. Around 35 lakhs of balance sheets have to be now bought into these formats is what I am just, this is my personal guess. So that is and wherever the challenges faced here would would come from do you think that your client would agree to come into the new formats or would treat it as a burden? Radhika ji, I think, most of them would be reluctant looking at all the extra work and the last minute, the methodologies we follow. But as we are a sandwich generation, we need to move towards standardization and maybe unlearn many things which are not which we have you been used to, like T-shaped balance sheet, fixed assets terminology, or many terminologies which we have got used to over the years for the sake of standardization, for the sake of comparability. This was supposed to have come long back, like, so now it has come into picture as a mandate, then we have to follow it. So there is very less option to them, even the what do I even the client cannot actually opt out of it. As you once wherever he gives his balance sheet, even the banker or wherever they submit the tender, they would force insist on all compliances as per institute, CA institute. They need to do it. So change is difficult at first, of course. Then after a long process of going through all the dirt, I think we will emerge out of it victorious. So the this standard basically is modifiable. The CA Institute has said wherever you feel that you need to modify it to a certain extent, supposing both the years you have some data which is nil, you can remove that line item. Or there is some some data, like, or you are a trust and which is having some profit portion, and you need to give an income and expenditure account and not a profit and loss account. There they have said you can change the nomenclature, or they have even said you need not give extra data, only give as much as required. No excess data is needed from you. That is what has been given specifically in the guidance note. Excessive information is not needed from by the department. Or if you feel you need to add some line item because of some accounting standard disclosure norms or any other disclosure which would give more clarity to the financial statements, yes, please go ahead. So it is not a very strict, like Companies Act, where you need to follow the format as it is. But still, there is a format being bought in which you need to comply with. So two major relaxations are great enough, where they have said you need not follow your actuarial valuation or deferred tax uh, or related party disclosures. All these are highly beneficial to a non-corporate client. Then they said in the accounting policies and notes to accounts, you need to disclose which all exemptions you are claiming. Basically, if you are not giving any disclosure, or you are having some relaxation due to the guidance note, then the CA Institute has said through the guidance note that you need not, you have to disclose that you are an MSME based on this criteria, and you are not complying with this is prescribed standard. Now, supposing there is a change of your turnover and suddenly you become a large entity. 1 year you're an MSME, second year you become a large entity. Then what? Does the format immediately, all the accounting standards immediately start applying to you? Yes. When you convert from an MSME to a large entity, all your accounting standards start becoming applicable instantly. There is no time gap given there. And for the sake of comparability, do you need to change? Do you need to change the previous year figures? Uh, Please answer this. What is your opinion? Do you need to change the previous year figures when I become a large entity from an MSME? Do so many new standards become applicable to me? So then do I need to revisit my earlier balance sheet and change all my disclosures and requirements and everything? The guidance note has specifically said that you need not. That much of relaxation they have given, that you can disclose in your notes to accounts that previous year figures are based on MSME disclosures and not as a large entity, and you need not again regroup or disclose all the other accounting standards related data. Similarly, if you were not the earlier auditor, so supposing the earlier balance sheet was unaudited, or you were not the earlier auditor and there is a change and all, you can happily disclose it in your notes to accounts. There is no need, it is better for give a clarity to say that the earlier figures were unaudited, and you need not audit the previous year figures, but you have to bring it to a comparable status. That is all. Now, some for exemptions I would like to forego, or some of them I would like to, in spite of being exempted, I would like to partially disclose. Then I need to give a disclosure in the notes to accounts. But supposing I was a large entity and I am now converted to an MSME, do my disclosure requirements go down immediately or not? No. The CA Institute in its guidance note has specifically said you need to wait for 2 consecutive years for them to get you the relaxation of all the accounting standards of the MSME. And as discussed earlier, wherever there are other specific formats given, supposing for a political party, like even in the FAQ, they have clarified. Supposing any other Delhi university has given you any other format where you need to present your balance sheet only in those formats, then please go ahead and follow those formats. Even NPO, if there is a guidance note specifically applicable to non-profit trusts and societies and all, and if you are and if you fall in those criteria, please go ahead and follow the other standards or other guidance notes. This will be exempted. Okay. Even for MSMEs, they have a rounding off is not mandatory, basically. But if you still want to go ahead and like in a corporate balance sheet, rounding off is not mandatory here. But if you still want to go ahead and round off your figures for a better presentation, maybe for income tax filing, you will need the exact figures again. So it will be a double work. But again, you can round off if your turnover is less than 100 crore rupees, to the nearest hundreds, thousands, lakhs, millions, whichever you feel comfortable with. But if your turnover is more than 100 crore rupees, then to the nearest lakh, you need to round off it, if you're opting to round off. And once you start using one unit of measurement, it is rightly said that you follow it uniformly in the financial statements. It cannot be that in your balance sheet you're giving in one unit of measurement and in your notes to account you're following another one. Comparative data needs to be given. And again, for income and expenditure classification, if they have brought in a similar criteria as in a company, saying that if your expenditure is exceeding 1% of the revenue or 1 lakh, whichever is higher, you need to form a new line item for that. Any doubts here as such?
There are some
Then we
queries in the
can,
Q&A, ma'am. Either
yes,
we can complete the session and then take all the doubts at
then go
once.
to, yes, yes. Yes, I think there are too many questions, so that then we
Yes,
will
ma'am.
take them up
And
later
if we
only.
miss anything, we can even
Yes,
unmute the participants and have an interactive discussion also, ma'am.
yes. Somehow I'm not able to. Just a second. So if we see the format actually, it is very similar to the one of a company. They have brought in all the terminology of the company corporate balance sheets here. And as you see on the like basic data, name of the non-corporate entity, balance sheet as on as at which date, even the profit and loss account would be for the year end date, year starting and ending date. And if your previous year is not for a year, then please mention as to which period it pertains to very clearly. So when you see for an individual or a proprietary concern or a partnership, you would have to start with your owner's capital account here. Then there is a reserves and surplus. But some cases of our original, like earlier T-shaped format, we may never have a reserves and surplus account. It is not mandated that you regroup your items now and separate out your reserves and surplus. Only in cases where you want to show it as a reserve and surplus, you can show. Otherwise, you can go ahead with your capital account, owner's capital account, and give the opening balance of the proprietor, name, share of profit, opening balance, capital introduced. Everything is similar to a company balance sheet. Their remuneration, interest, their withdrawals, the share of profit loss for the year, and the closing balance in the case of owners. Owners, in the sense, this can be applicable to a partnership concern also, not an LLP, but. So you start with you have to even give a brief about the entity. What business do they do? Like in a corporate case, like, at least you should know the business of the entity and what are the significant accounting policies being followed. Then you can give all your long-term borrowings. This non-corporate balance sheet and the formats actually have lot of disclosures when it comes to borrowings. They have classified the borrowings into, if you see, from bank, from others, from related parties, all other parties. Then you have to bifurcate them into long term, short term, based on each head of security given. You need to specify the security and the terms of repayment also. So a lot of homework may need to go in into disclosure of borrowings basically.
I'm sorry to interrupt. Please
Yes.
click the slideshow button, ma'am.
Yeah, thing is that I don't know, somehow I'm not able to go to the next slide when I'm doing this.
Okay, you can try now, ma'am.
Yeah, I'm trying this. Yeah, okay. Okay. So
And
borrowings, deferred
one more
tax?
question with everybody is asking, ma'am. Will we be
Yeah.
sharing the PPT?
Yes, 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 yes. So this is not a problem. Actually, CA Institute has come up with an Excel version also. We can simply follow the Excel version of the non-corporate entities given by the CA Institute itself.
Okay, ma'am.
So I just brought in it into my PPT for ease. Otherwise, it is all given by the CA Institute itself.
Okay.
I'll share the links also from where you can download
Sure,
the
ma'am. Thank you.
FAQs and then. So deferred tax liability asset may not be applicable to MSME non-corporate entity. In large entities, of course, similar to balance sheets of corporate entities, you need to calculate the deferred taxes. Other long-term liabilities, short-term borrowings, long-term borrowings, similar to a company. When it comes to fixed assets, there is no longer any terminology called fixed assets. Property, plant, equipment, comparable data for each head of property, plant, and equipment will again come into picture like in companies' balance sheets, where uh, your property, plant, and equipment needs to be bifurcated and given as intangible and tangible assets. So all your softwares which you might have booked as computers and softwares earlier as per income tax return need to be bifurcated. Now comes the basic question of how do we go about with a balance sheet of a individual or a non-corporate for whom we were following depreciation method as per Income Tax Act, whereas accounting standard speaks about um, you know useful life of fixed asset method. So that would be a basic challenge to again go back each line item wise and arrive at a WDV of the uh, item so that you can recalculate the depreciation into accounting standard 10. In new cases, supposing your non-corporate was incorporated only 2-3 years back, maybe it is possible to recompute and go item by item and check your date of put to use or sale of fixed asset or details like that. But in legacy systems where you have inherited businesses or partnerships, I think it would be a challenge. This is the major challenge which I foresee. So for this, the only way out, which I think all the seniors are speaking about, is that you need to give a qualified opinion in the Form 3CD. Supposing it is a tax audit case, then the tax audit report is the report which you are giving as an audit report here. And in Form 3CB, para 3, I think you will have to give a disclaimer saying that you are unable to compute this depreciation as per the accounting standard 10 here. But supposing you are able to, like actually as per SA 705, you need to even quantify the, whatever you are giving a qualification, you need to quantify the qualification too. But actually quantification too may not be possible. So disclaimer to that effect needs to be worded and put in the para 3 of the para 3 of the 3CB, basically. That is the only way out, or wherever you are able to recompute, I think we should start the work now itself before the before filing of the tax audit reports, because this would be a heavy activity on the non-corporate, and they giving us data might be a challenge. Similarly, other current liabilities. So all the balance sheets, they have specifically said that the GST portion needs to be bifurcated and only the net revenues have to be reported.
You can keep asking questions also, ma'am, as the session
Yes.
was interactive. It was.
Yes. So earlier we used to not bifurcate capital work in progress for the non-corporates. So I think that also has to be brought into picture now. And intangible assets under development. Supposing there is a software, in-house software development going on, then you need to put it as intangible asset under development as a long-term loans and advances, inventories, trade receipt, cash and bank balances again have a lot to be reported on as per the new format, because uh, the fixed assets, fixed deposits, which we were just including in our cash and bank balances earlier, have now to be reported as, current, non-current. Just a second. Let me share should I go ahead and share the, actual guidance note on it, which was there?
Sure, ma'am, please.
Yeah.
Until then, I request the participants to keep posting the queries in the
Yes.
Q&A section. We'll take up all the queries after we conclude with the session.
So as you see, this Excel has been given by the CA Institute itself, like where balance sheet,
1 second, ma'am.
P&L.
We're unable to see the screen, ma'am.
Oh, okay, okay. Sorry. It is some time lag is there, I think. Or ahead.
Or you can try sharing the entire screen, maybe.
Yeah. Is it visible now?
Yes,
Yes.
ma'am. It is
Yes.
visible, ma'am.
So this whole format of Excel has been given by the CA Institute itself. So the balance sheet is very similar to a company case, and all the items are also very similar. Where wherever it is a not a partnership concern, you can modify and remove the partnership remuneration part, and then in the P&L basically. So this we have talked about. Then all your borrowings from banks have to be bifurcated into many varieties as secured, unsecured, long term, short term, or like many bifurcations of the borrowings basically. Then trade payables, trade receivables, again MSME disclosures have to be given in the balance sheet itself. MSMED Act of 2006 related disclosures where any dues to outstanding dues to the MSME or interest, everything whichever is related to the goods or services which are being included for the business purposes have to be reported here. One specific point which I would like to clarify is that wherever there are personal expenses of an individual or personal income and all will not be brought into this balance sheet, even if there are borrowings of the proprietor on his personal capacity or partners who have given any guarantee of their personal assets need not be brought into the business balance sheets. These are basic principles actually. Provision for gratuity may be exempted for small MSMEs, but actually they have asked to calculate on your own scientific methods. So the Gratuity Act is applicable for only those cases where the employee numbers are more than 10. But like if you want to cover your employees under not covered under the Gratuity Act also, still you want to provide for gratuity, then you can calculate on any scientific criteria like half month salary based on the years of service rendered or so. It is suggested that more as the employees join, not after 5 years of their employment only, but as soon as the employees join or are 2 years onwards, you can start creating provision because at the end of the day, it is payable. So it is better to have a provision beforehand. So balance sheet, this depreciation statement, each item wise, they need previous year comparable data. Inventories have to be bifurcated again into raw material, work in progress, finished goods, stock in trade, like all your other company balance sheets. And good, if there are any goods in transit included in these items, they have to be reported and disclosed separately. Then when we come to, just a second, when we come to investments, the investments which are quoted, actually the market value as on 31st March needs to be disclosed here. And wherever it is unquoted, the value as at cost needs to be given. Aggregate amount again. Even for trade payable, trade receivable, you need not give a laundry list of items. You can give a aggregate list. Whereas investments, of course, if it is in a quoted entity, then we need to give the name of the entity. Trade payable, trade receivable, etc. You can give a consolidated amount here in the format of balance sheet and P&L. So the FDs which were less than 3 months would come as cash. That is what we were discussing. The FDs, you have to take up the FD figure of the individual or the non-corporate entity and bifurcate it into three types of items again. Fixed deposits which are maturing less than 3 months, 3 months to 12 months, and more than 12 months. So CA Institute has said less than 3 months is as good as cash. So you can classify them as cash. 3 to 12 months, you need to include it as bank balances and the others as your other current assets. Auditors, yeah. So say when we come to revenue, they have said please exclude your excise duty here. We have a debate going on whether it should be excise duty or GST. But then I think it is only excise duty wherever excise duty is included in the sale of products, because sale of products has or services has been specifically for any balance sheet. It has been clarified that it should be net of GST only to be reported. And we would not want unnecessarily to include GST into our turnover and cross some criterias. So it is better we show it as net of GST and go ahead with the P&L. So inventory again, as in a corporate balance sheet, you need to bifurcate into all raw material, packing material, other items, opening, closing, consumption. So we are all used to a corporate balance sheet, but that whole learning we have to now bring it into a non-corporate entity. Partners capital remuneration would not be just a sec. Partners remuneration is a separate line item in the profit and loss account, yes, but the interest given to partners is to be included in your finance cost. That need not be separately reported. So on partners capital and members capital has to be included in your finance cost. It has been specifically given as a line item here. Rent, repairs, insurance, whichever amount is more than 1% of your income or of your revenue has to be classified as a special line item. Whereas if you do not have any item to be reported in both the years, then you can as well exclude that line item too. That liberty has been given to the client. So as we discussed, most of the criteria are relaxed for the non-corporate. But when we go to reporting for MSME dues, as in any corporate entity, the dues to traders is not reportable, but it has to be again reported as other payables, not as MSME, but at least in MSME classification, you can stick to your micro and small, whereas your medium need not be separately disclosed here. Whereas the liability, interest liability, and the every timelines and all are applicable even to a medium enterprise, medium MSME as per MSMED Act. It need not be reported as due to MSMEs here. And maybe we get confused with MSMEs under both the apps, but the dues to MSMEs which are registered under MSMED Act, the dues to traders need not be reported under the dues to MSME here. So what would be the major challenge which we see? I think after so much of deliberation on the formats given and everything, what would be the major challenge which all of us are seeing here in going ahead with these formats?
The participants can even raise their hand if they want to speak. Until then, we'll take up the questions, ma'am, in the
Yes.
section.
So I think we should start.
Welcome from the top, ma'am.
Yes. I think is the Takrar one the first one, or am I missing
Yes,
something?
ma'am. That's the first one,
Okay.
ma'am.
What about, yes, if trust follows NPO technical guide, do they need to follow? Yes, they need to follow. If they are 100% non-profit organization, they need to follow the technical guide given for NPOs. The clarity of the items will come from there and the format will come from here. Cooperative societies, it is applicable. This non-corporate entities guidance note will be applicable to credit cooperative societies also. All sorts of societies, trusts, and all, wherever there is a business activity, this non-corporate standard will come into picture. If there is no other format being prescribed under any other act or any other law for them, supposing a credit cooperative society has a specific format for them, then they need to follow that. Amit Agarwal, sir. Then the second, next one is Jayashri Madam. Is it mandatory to use new format as per new guidance note, or can we use technical guidance note, old format? Actually, there is not much of a change between the old technical guide format and the new format, but you need to stick to the new guidance note only. The technical guide has been superseded by the new guidance note. Can a large entity follow cash basis of accounting, need to change to mercantile, or can continue with cash basis? Yes, you can continue with cash basis. There is no specific, rules which says you should not follow revenue or cash basis of accounting, but your accounting standard speaks about accrual basis. So you need to disclose in your balance sheet. You need not qualify the report, but you need to disclose in your notes to accounts that you are following cash basis of accounting. Even in your 3CD, there is a point where you disclose about cash basis of accounting. And most of the cases, yours is a modified cash basis of accounting. So many revenue items which you are on cash basis, you would actually use cash basis, and some of them, like your TDS or something, you might be following mercantile again there. So you need to clarify what method you are following. Is it mandatory, Srinivas Kote sir, is it mandatory for 12A charitable trust not involved in any business activity to follow financial as per guidance? No? Can we choose technical guidance? No, technical guidance formats have to be followed, sir. Because for trust and NPOs, they have given a technical guide separately. What about cash basis? Can they provide for gratuity? That's what you can see again in your normal balance sheet, accrual balance sheet also. Earlier, we used to say gratuity has been not provided for and would be taken care of on cash basis. That I think will have to be excluded now. We need to stick to one basis of accounting. Supposing you are following accrual basis of accounting, you need to provide for gratuity. You cannot be selective about it. You have to at least create some, they said you need not do actuarial valuation, but you have to have some scientific basis of providing for gratuity. So when you're following cash basis and you're providing for gratuity, that means you are following a modified cash basis of accounting again. MSME disclosures for entities following cash basis. Any disclosure, yes, disclosures are necessary. As long as you put a disclosure in your notes to accounts, accounting policies, much needed, sir. Gunja madam, sir. And then Naveen, sir, are entities not subject to tax audit required to follow these guidance? Yes, as long as the CA signs it. So the onus is upon the chartered accountant here, because we are the ones who are being regulated by the CA Institute. The client may say, I need not follow it, and government has not notified it. But as long as a CA is signing it, the onus lies on the chartered accountant who is signing it to bring it into the new format and then sign it. So wherever there is an attest function involved, there this new format is to be complied with mandatorily. Should we qualify if it is hybrid? Need not qualify, but you need to disclose basically. You need to disclose it in the notes to accounts and even in the disclosures as possible in the 3CD. Balance sheets prepared in new formats only for bank purpose. We generate UDIL and in which head. Supposing you are signing the balance sheet for the purpose of only bank, but you are signing it, then you will have to generate a UDIL. Maybe any other, whichever applicable head. I am not very knowledgeable on which head is to be right now. I might not be remembering which head to be opted in that, but any balance sheet or any signature you are doing for any format has to have a UDIN on it compulsorily, sir. Am I clear, or like is there any other doubt on this? And like
Somebody has
earlier,
raised their hand. I'll try to unmute them.
yes, yes.
Hello.
Yeah, ma'am.
Yeah, madam. I'm just concerned regarding the mandatory applicability of guidance notes because, if you see the FAQ also, they generally refer it as an recommendatory nature. So it is applicable to me as
Yes,
a chartered accountant, right? So
yes,
it's very
yes,
disturbing to convince a client to
yes,
really follow
yes.
something which is not mandatory for them. So I just needed
Yes.
to
So as
talk on
long as
that.
they don't go for any loans or they don't go for any tendering or anything, they might be able to get away with it. But generally speaking, it will be something which will come by force from outside also. Even
Okay.
people will ask you to comply with CA Institute standards, and wherever you're attesting, then you as a CA have the onus to bring it to the format. Otherwise, it would be treated as not audited properly, and you will be under misconduct. So this may take a challenge, but if supposing there is a case, one-off case where they are not agreeing at all to bring it into the new formats, or it is not possible at all to bring it into, then you have to give a qualified opinion.
Right.
If
So
you're
they
not even qualifying, then you are the one who's in misconduct.
So even though the trust, I'm talking about a charitable trust, which
Yes,
is
yes.
100%,
No,
non-business
100%
thing.
NPO, there is a different format.
Yeah, so then I will insist them to follow technical guide for
Yes,
NPO. And if they still don't agree, I should still qualify it, right?
yes, yes.
Okay.
Wherever there is a mandate and and you are presenting some financials in any other format, then you have to qualify. As a CA, you are certifying it
And I need to follow accounting standards as well, right? For
as
the
applicable.
NPO
Yes,
as
yes,
applicable.
yes, as
Understood.
applicable.
Thank you so much, madam. It was fantastic. Thank you.
So the challenges which I am seeing as of now is the current, non-current bifurcation, the depreciation calculation, the MSME disclosures of the dues to MSMEs. The contingent liability you may be able to quantify this for this year, but the contingent liability for the previous year, you need to go assess which cases, what was pending, the FD splitting, the expenditure regrouping for supposing 1% group of revenue they have said. I may bifurcate it here again. Again, for my return purpose, I may need to regroup it. So some of the basic challenges, the payables regrouping based on payables or receivables are to be specifically for the goods related, goods purchased or sold only. Whereas if it is relating, supposing my trade payable is relating to a capital item, then I need to show it as other payables and not as trade payables. So all this may be a challenge. We may take a few years to actually understand and fully, sink into it. But it is a mandate now, so we don't have much of an option. And when you compare it with a balance sheet of a company, most of it is similar. But some of them, like, some disclosure requirements like aging, like ratio analysis, have been left out for the non-corporate entities. Rounding off. And even your users in the non-corporate cases are lesser than the corporate cases, basically. I think there are some more questions which have come up. Uh, Yeah, what reason can you give? Basically, data not being available. See, Yogesh sir is asking what reason can be given for not quantifying amount for not following accounting standard. Then you can always say lack of data. That is all is what you can say basically. It is all upon the wording which we like. We have to formulate some disclosure qualifying wordings which we need to put in there. Somebody in Dell, ma'am, individual balance sheet in normal format and business in ICI format, is it okay? And can we prepare consolidated in T format? Hmm. As long as the balance sheet is, you're signing a balance sheet, it needs to be in the ICI format. And all other personal balance sheets, supposing there is an individual case and he has a business entity, and for the business you're doing the tax audit. It is not the person whom you are doing the tax audit for. It is for the business entity. So that business balance sheet you need to put it in this new format. Whereas if there's a total consolidated individual balance sheet which you are including all personal assets and personal liabilities, I think that can be in your earlier formats. Also, any link for private finance? Yes, there is a link which I'll be sharing in the groups. It is actually available on the CA website, and that I will share the link. So, is there any other
I
doubt
think we have
here?
answered all the queries, ma'am.
Yes. Yes, it is a challenge which we have, but we are used to as CS, we are used to every few years, Companies Act revamp, GST revamp, and now the non-corporate revamp. I think being a sandwich generation, we have to change and evolve, and this is also evolving, and this was much overdue. I'll stop sharing my screen, or?
Yeah, ma'am, you can stop sharing.
It's okay.
So I think we can proceed towards the closure.
Yes.
Thank you, ma'am, for an enriching session. And it was a very interactive and interesting session, ma'am. And you have answered all the queries very patiently.
Thank you.
You might have answered more than 50
think-
queries. So thanks a lot for that, ma'am. I request CA Vijay Bagaria ji to present vote of thanks.
Yeah, thanks, Vivek. Good evening, everyone. It's my privilege to have asked to propose a vote of thanks to this webinar. I am on behalf of Agarwal CA Society extend a heartily vote of thanks to our esteemed speaker C. Alka for sharing her knowledge and insight for the benefit of our participant. We would like to present a small token of gratitude to our body speaker Alka ma'am. The webinar was very informative and we thank you, ma'am, for your time and effort for us. I congratulate CA Vivek Agarwal, Vice President and Young Brigade of the ACS, and other members who helped in organizing such a useful event. Finally, I would like to thank all the attendees for your wide participation and making this webinar a success. We hope that your such support continue even in future. Have a happy weekend. Thank you.
Thank you, ma'am. Thanks a lot, ma'am.
Thank you. It was my privilege, actually. Thank you.